Pull up in motorcades. I got a show today. It's all I'm trying to do. Hustle and motivate. Choppers a throwaway. Hustle the overweight. That's why they follow me, huh? They think I know the way. Cause I took control of things. Ballin' the solo way. And if you pattern my trend, I make you my protege. Crossing that soldier race. Niggas don't know them days. Take you in back of the buildings. Make you expose your rage. Take you across the tracks. Make you explode the face. Now you official now. But you got a soul to save. I just been cooking that new. I'm about to drop in a few. Think if I call it the great, the people gon' call it the truth. I ain't really trip on the credit. I just paid all of my dues. I just respected the game. Now my name all in the news. Tripping on all of my moves. Quote me on this, got a lot more to prove. Remember I came in this bitch, fresh out the county with nothing to lose. For nothing. No. On the ground, oh. You. But I don't do this shit for nothing. No, not no. Not at all. You. But my money real. That you do. Oh, yeah. So I don't do this shit for nothing. Like I never left. Stand for some shit that you never read. Passing through stages in life through the ups and the downs.
Sweet, let's get it. Let's get it. Let's get it. Cool. Alright, we just purged some London and early New York. Relatively equal highs. Right below our all-time high. Right below our all-time high. I'll try to make this quick because it looked like something might be setting up. We shall see here. But we got all-time highs right here. Make sure we're good. Yeah, so we just purged a bunch of buy-side liquidity from, let's see if we close in that little 1 minute fair value gap right here. Right, all this liquidity from the London session, early New York session, that's all buy-side. Getting a small little shift in market structure after purchasing that buy-side liquidity. But we're pretty close to that all-time high, honestly. Right, building up some inefficiency, or building up some liquidity there. Right, we had a 1 minute inefficiency here with relative equal lows that we just tapped into. Right, so you know, I would anticipate we come up and purge this buy-side liquidity, which is all-time highs. Right, which is right above where price is at right now, since we're just filling some inefficiencies in. All right, but going back to yesterday. All right, but going back to yesterday, right, we had a pretty fire FOMC session. Right, it didn't let us in, but it ended up doing exactly what we said it was going to do. At first, right when we were coming up on that specific timing, we just built up liquidity on one of the ends of liquidity from FOMC. One of the first initial moves from FOMC, right? Build up some buy side liquidity, came down, purged the other side, right? So we're going to target the opposing side, which is this side over here. No shift in market structure on the 1 minute, right? But you can see we flew through that buy side liquidity right here, right? Flew through it. Very nice looking. Now let's see how the week is closing out here. Let's see how the week is closing out here. All right, this weekly candle, I mean, it's just 250 handles of just straight upward prices, right? We only got a little tiny move below the open here, about 15, 16 handles or so, right? And then just 20 handles up to the straight to the upside. Right, so maybe we come a little bit off the high, right? Kind of create like a little top wick, or we finish pretty closely around the high of the candle. Right, that's what I'd be looking for. Right, we created a huge busy right here, taking out this short-term high after making relatively equal lows. Right, so let's see if we leave this gap open, right, or if we come down and trade into it. Right, but if we look at it, we're about to come above yesterday's high, possibly creating this daily busy in. But overall, I mean, it's just been very, very bullish order flow, right? So we just have to be patient and wait for when it wants to slow down and when it starts like tilting its hand in different directions, right? We have a nice little 4-hour fair value gap here that's untapped into with some relatively equal lows on top of. Let's check out the 1 hour. 1 hour, we did displace below these some lows here, right? But that's inside this move. All right, so overall, I can still see us being pretty bullish, right? Relatively pretty bullish. All right, we're still inside this low, high, right? We're still just inside that range. So until we start breaking that range, overall, still pretty bullish on price. Right, so we have a potential 15-minute busy being left here. Right, so maybe we actually have some volume imbalances in there as well. Right, 2-minute busy. Save this. I actually like it better on the right side than the center. Alright, so we have a nice little 15-minute busy here. Those little buy side liquidity rate that we just did on the 1 minute, right? So far, actually, price is actually respecting it. Right, painted outside the lines a little bit for this 1 minute CB. Right, but so far we are respecting it. So, you know, overall, we still have that bullish order flow, right? So let's just keep riding that until otherwise, otherwise stated. So we have this 15-minute busy. Let's see if we can come down here, get a little 1 minute shift to market structure, bullish inside of there. That's something I'd be interested in. Right, catch it, and then first target would be that all-time highs, right? That buy side liquidity that's left from previous day's high, which is yesterday. Right after that FOMC.
just sitting here trying to win. Pull up to the spot, it's a flock of beers. So much smoke, need oxygen. Free up money, that's not to spend. All gold bottles that toxic again. Standing on the couch, me and my accomplices. Pop a bottle, spot the bitch. Get the bitch, got the bitch. Streets wanna know when you dropping it. Police wanna know how you got your six. Niggas on the side hate to watch the shit. See you on top, so they throw rocks and shit. Never was really with the talking shit. Me, I just went and got a pot to piss. Upgrade diamonds on my watch and shit. Pictures on the wall at my offices. AC coded in my Compton bitch. Talking that, you don't even need a condom shit. Look, I'm really on some baller shit. On some rich nigga, I ain't gotta call you shit. On some fuck with me if you loyal shit. Everybody in my circle get spoiled shit. Really started in the soil shit. Crowns on the wrist, that's real shit.
I'm just sitting around here smoking weed with my niggas. I just hope when we gone that they don't forget us. Sitting around here smoking weed with my niggas. I just hope when we gone. Check it out.
Right, so there we go, going for that buy side liquidity. Right, seeing that fair value gap not hold whatsoever. We just blasted through that thing right now. Very nicely. Very nice.
That's a price to jail. And if we live in a hell, is it all right to sin?
Right, so we might not get the opportunity to go long inside that 15-minute busy, right? If we come up and purchase buy side liquidity, which is previous day's high, right, from yesterday. Right, there we go. Just purged previous day's high, which is also all-time highs. Right, so we just created a new all-time high, which we seem to be doing a lot these past few days, right? Which is solid, very solid. Right, so let's see. We're above previous day's high, also all-time high, and it's Friday. And it's about to turn into the first AM macro. So maybe we can get a little shift in market structure above this previous day's high. You know, we get a little bit of that distribution off of the high of the candle, right? The weekly candle as well as the daily candle. But let's see if we have any sell side targets, right? Because overall we have some relatively bullish order flow, right? Well, right off the rip, actually I take that back. There's a little tiny secret little wick right here. Right from FOMC right there. But honestly, like before, there's no real like sell side liquidity targets and inefficiencies. Right, not really. Right, if we're looking like relatively equal lows on imbalances or like short-term lows inside imbalances and stuff like that, we just don't have that. Right, we just don't have that. It's pretty well efficient throughout this entire run here, this entire run here, right? The only displacement that we're getting is these retracements, and overall, I mean, it's still respecting price and just keep working its way up higher, right? It has yet to do any clean shift in market structure or anything like that. So, you know, we might just be sitting on the hands, right? Yeah, that's just how it's been this week in particular, right? With just bullish trending price action. I don't know, I find it a little bit more difficult to get into positions if we don't get a retracement, right? Which is completely fine. Right, it's just staying patient, protecting the capital, right? Capital preservation, right? Which is all good. We're gonna have some. If it's anything like the price action that we had immediately after the election the next day, right? Overall, pretty clean, right? If we have some good volatility, this next year, which I think we will, based on liquidity cycles, right? Seasonality. Donald Trump being president, right? The presidency, tax implications, right? Fair value accounting for Bitcoin, right? All these things in combination with each other, right? Most importantly, the seasonality plus liquidity cycles. I would anticipate we get some, right, fairly bullish price action throughout this upcoming year and the years to follow, right? And when you get that pretty much one-sided price action, it's relatively more easy to trade, right? If we're looking at, let's look at the continuous contracts here. This is a little macro session here that I'll be dropping, but right, when overall bullish, I mean, look at these weeks, right? All the orange is bullish candles. You know, it's relatively more easy, right, when it's just pretty much one directional. Sure, we have some down close weeks, right? But overall, the vast majority are up close candles. You know, for the past, like, let's say 4 years, right, since pandemic. Let's see if we can squeeze in that, right? A lot of up close candles here. Sure, we have sections of down close candles, right? But majority we're working one way. So should be exciting, right? Should be really exciting to get this next year as a price action, right? And I think we're even on, yeah, we're on log 2. So this is looking good. Right, so overall, pretty excited going into next year. I think we're gonna have some, right, in combination with that, like deregulation, right? So I don't know what they plans are with the SEC, right, and Gary Gensler and such, that's kind of been wanting to regulate and kind of bestow themselves a little bit on crypto a little bit more. So we'll see what happens with that, right? In combination, with regulation, right? If the Federal Reserve is going to start increasing the M2 money supply by cutting interest rates, right? That is the liquidity cycles within that. That is very, right, very good for high liquidity assets, correlated assets. NASDAQ in particular, which I think has some of the highest correlation with liquidity, as well as Bitcoin at S&P 500. You know, so just everything in combination, I anticipate we're going to have some pretty good moves in the market, right, this upcoming year. It's going to continue doing the do, right? That's the way I see it, right? It's going to continue doing the do. Let's do a little projection here. See, I don't even like this using this though, because look at the relative equal highs. The relative equal highs on this guy. I don't, it's, let's check it out. 50%. We did get a little retracement after that. Is that a 5-minute imbalance? Oh, that's crazy too. I don't look at price too often, right? The actual like numbers. I'm just looking at the price action of the candles. But wow, well, did we hit that yesterday too as well? Wow, that's crazy. S&P 500 at 6,000. Right, S&P 500 at over 6,000. Sheesh, sheesh. I think when I started first looking at the charts, I want to say it was like 3,000 something. Right, yeah, all during pandemic and such. Yeah, before pandemic, like 3,000. Yeah, early 3,000s. Sheesh, so we've doubled. I mean, even from the pandemic bottom, just from 3,000 though. Right, we've doubled. That was what, 2018? So like in 6 years we've doubled. Right, not as fast compared to Bitcoin, but I mean still for an institutionalized ETF like the S&P 500, that is in 6 years, that is pretty good. Yeah, I think according to Raoul Pal, I want to say he said the highest correlating asset is to the Nasdaq to global M2 money supply, and the only reason why Bitcoin's not higher is because it's outperforming the liquidity. So I think it's at 87%, 89%, around that range. While Nasdaq, I think he said was 97%, right, correlated to I want to say it was M2 money supply, right? Or it was either M2 money supply or global liquidity, right? Super highly correlating assets to, what happened to my, is this the continue? Oh yeah, there we go. Right, which is, I mean, we're coming up on the global liquidity cycles. Right, if you check out that most recent video from Raoul Pal, let me see if I can even drop it. I thought it was a very, very concise and overall pretty solid video. Let me see if I could drop it here. Oh, I'm not sure if I could drop links in the chat. Let me see here. Can I drop it in the comments? All right, so that's a fire video. If you get a chance, check that out. Right, it's great on the global macro perspective on M2 money supply and where we're currently at within the liquidity cycles. In the liquidity, right, within the liquidity cycles. Pretty solid video, if you ask me. Right, of just like how the global liquidity cycles, how they rotate. Right, there's seasonality to it. Right. So that is fuego, and just why, you know, assets tend to run in certain periods within the cycle, just based off of liquidity. Right, and Bitcoin is a very high liquidity driven asset, so S&P 500 too as well. Just not as highly correlated to liquidity as Bitcoin. Right, so we can anticipate some very prosperous growth in this upcoming years. Right, very exciting, and looking forward to it, honestly. As long as the charts are moving, right, there will be something to trade for sure. Right, there will definitely be something to trade. So, looking forward to it. Right, look at price is it's just on a rampage. Absolute tear. Honestly, I don't even know the last time that the market was this bullish in 1 week. Right, we're looking at almost 4.5%, 200 and over 250 handles this week alone, with only 16 handles below the open that we traded down to. I mean, if you look at all these previous weeks, I mean, this was a monster week too in September. 4.18%, 228 handles to the upside, right? 222 handles from the upside in August, right? But before that, let's see on the continuous contracts here. Some of these bigger weeks here. I mean, these are not. Oh, here we go. October of 23. Right, October. 5.53%, 242 handles. That's a monster week. Here's another monster week right here. About the same, 226 handles, 5.43%. Monstrous week. Right, that's back in 2022. Right, so we only had one of those monster weeks in 2023. And we've had about 3 this year already, 2024. I don't think any in 1 in 2003, 2023. And we've had 3 monster weeks in 2024. Right, August, September, November. Incredible. All right, it's looking like we're getting some displacement here on the lower time frames. Right above this previous day's high. Let's go down to the minis here. Right, we got some relatively equal lows right above this 15-minute imbalance. Right, we got a 3-minute shift in market structure potentially here. We got about 28 seconds left in this current candle. Same thing as the 2-minute here. So we'll see what kind of range we're looking at, and we can kind of determine what we're gonna do from here. Right, we also have this 1-minute shift in market structure right above this previous day's high. So we'll see if this holds, right, or if we completely close this in. But this is looking solid. This is looking pretty wide though. 6.5. Yeah, I'd be willing to take this at like half risk, just because the range is so wide. Right, I'd be willing to sell that right there. And I don't know why it's not letting me put a stop loss limit here. A buy stop limit. A buy stop limit. No, that's not what we're looking for. Just a buy stop. There we go. There we go. So it's a little bit wider than normal, but We'll take it at half risk. It's just outside the 5 handle run. All right, it's about 6.5 handles for the stop loss here. To get a little bit more visual, right? We executed 1 tick above the open, or 1 tick above this fair value gap. Right, so we're looking at about 6 3/4 stop loss, right at half risk. We'll take, let's see here. We'll take 80% off, which is 4 contracts. Buy limit, 4 contracts at 10 handles here.
Then my mind got restless, put myself in the game, but batteries so separate. Question. Since when do real niggas come second? So I kick the dough down, getting more down. Nigga need at least like.
Let's see if we had that shift in market structure as well on the 3 minute. Yes, we did. The 2 minute, right? We have this upper fair value gap up here. 3 minute potentially creating this fair value gap as well. Right. We have some low hanging fruit target here. Some minor, relatively equal lows. Right, but we're going to take 80% off at 10 handles. And we'll take the last little portion off at, let's see here. Let's see where Monday was at on this setup here. Monday's open. I mean, right here. We're sitting something like that. So 20% of the range would even be down here if we had that TGI Friday. Coming back into that weekly range. I think we can go for the single low here. Let's see. Right, so that's what we're looking at. 1 minute shift to market structure, fair value gap here. It's also a 2 minute shift to market structure, coming below this low. Fair value gap a little bit higher. We have some relatively equal lows down here. We'll take about 80% off at 10 handles. There we go. We're also inside that first AM macro. Good timing. And we're above previous day's high. Right, which is real nice. Real nice.
That's why I call my thing the marathon, because I'm not gonna lie and portray this ultimate poise like I've had it figured out. Nah, I just didn't quit. That's the only distinguishing quality from me and
All right, so we'll let that play out. It's a pretty solid area. Right, we're above previous day's high. We have some relative equal lows down here. Right, we have a 1 minute, 2 minute, 3 minute shift to market structure. Right, we got a nice little 15-minute fair value gap down here. Looking solid. So we'll let that do its thing. We'll get yeah, we'll let it do its thing here.
I think that our reaction to being disrespected, we have to reassess how we react. You know what I mean? I think that we've been known as hip hop to make songs, and that's a part of it. And then we gotta go a step further, because I think that it's like a disease in your body. Once you start giving it a treatment, it'll get immune to the treatment, and you gotta try something else to kill that disease. So I think protest music is important. I think that YG was
backbone, nigga, where your code at? Where your down since day one, real bros at? Where them stories that you telling unfold at? Where your heart, nigga? Where your soul at? We got old school ways we expose that. Ain't no guarantees, but you know that. Niggas die every day, can't control that.
Never gonna love no broke ass bitch. Whoa. What's that on that beat?
Ride round, out of bounds, 40 cal, 30 rounds.
All right, so let's see if we leave this 2-minute fair value gap open here. But also I give it permission to trade up into that 2-minute fair value gap here. But this is looking good. Creating some buy side liquidity here, relative equal lows. We also have this upper 2-minute fair value gap. Exactly 5 handles as well. But this is right. It's nice and during the first AM macro session. We got this lower 15-minute imbalance down here. Right, with some volume imbalances as well. Right, we'll flip over to the minis here. Right, nice little 15-minute volume imbalance on both ends of this fair value gap that's busy. Right, this inefficiency here. We purged some relative equal highs from London session. We purged the previous day's high. Right, and then we got that nice little 1-minute, 2-minute, 3-minute shift in market structure. Right, it is also Friday, so we could be retracing back into the weekly range. Right, and it's a little bit outside the 5-handle range, so take it at half risk. So it's going to be a pretty minuscule setup, right? Like deleveraging quite a bit. Right, deleveraging quite a bit. So let's see here. Let's see if we don't trade up into this and we just start getting displacement to the downside. Right, we got some nice relatively equal lows that we generated here, as well as here on the lower time frames. 2-minute, 3-minute, 1-minute, 4-minute, 5-minute. Right, even on the 15-minute, it currently has those relatively equal lows on there as well. So it's looking good. Just hanging out around the entry here. If we do it, calculate it in time terms, usually takes about 6 to 26 minutes, which would put us at 10:32, which is that 10:30 turn. Right, there's not too much going on though. Right, took it off of this 1-minute fair value gap here. Right, which is a little bit wider than normal, but taking that at half risk, right, with giving it permission to come up to this 2-minute imbalance right here, right, which is also after the shift in market structure. 3-minute has also got a small little fair value gap up here as well, right, trading and closing below this low very nicely. We got our first partial 80% off at 10 handles, right, and leaving one to the single low created in pre-market right here. This is also a clean little 2-minute fair value gap.
Train riding west side with the young extras. These old rules came with no questions. Grown and live by, but it's no exceptions. Was young and reckless with loaded weapons. It's cold to
All right, so we traded up into this 2-minute fair value gap, right, which I gave it permission to trade up into. Would like to not see this fully get traded to, right? Would not like to see it. If we're that bearish, right, I would anticipate we don't trade up and fill this top portion of this fair value gap, right? Right. Would want it to, you know, I mean, first little barrier would be consequent encroachment of this fair value gap, right? The midpoint of it, right? And then you got the upper third portion of the fair value gap, which is right there, right? And then you got the full thing, which would be trading to the high of it, or the low of this candle, but the high of the fair value gap. Right, so we just tapped the high of there. We will just sit patiently, right? Now within this, would want to see the candle closure back inside of here, right? Wicks can do the damage and pain outside the fair value gap, right? But if the candle bodies still respect the fair value gap, right, that is telling the actual story when the wick is just doing the damage above the fair value gap. So we got about 25 seconds before this candle closes. Right, so candle bodies respecting it, right? But we had a little gap up. But if we still get that closure inside and below this fair value gap, that is the next thing I would be looking for, right? Is we return back underneath this 2-minute SIBI, and then we get a closure below it, right? And then if price trades back up into this 1-minute SIBI, then we get that respected again. Basically like reclaiming this fair value gap here, since we are painting a little bit outside the lines here. Check the 1 minute. Just let it do its thing. Let it do its thing. Right. Got about 18 seconds within this candle. We're approaching the stop loss here, but you know, always give it permission to trade right up into it, the high. Right, it just has to go past it by 1 tick. Right, that ensures that we're accounting for spread. Right, so we are getting this candle painting outside the 2-minute fair value gap here. Right, we completely understood the risk that we're taking. Right, this is all a part of the game here. Right, understanding the risk. Only took it at half risk. Yeah, but what I'd be looking for is we trade back down. If we see this candle, this current candle, start respecting this to the upside, right, and not trading below it, right, more than likely we're going to be attacking the high here, right? But we're painting outside the lines quite a bit. Would want to see this candle dip back into this 2-minute SIBI and get that closure below, right? But overall, I mean, we understood the risk here. It's just it's just clean, right? We're above previous day's high, getting that shift in market structure after purging a bunch of buy side liquidity here. Buy side liquidity under or above the previous day's high, right? But we're just in a very bullish environment after the elections, right? Very bullish environment. But nonetheless, right, executing on it without hesitation, right, when we trade back up into that fair value gap. So, you know, just doing the do. All a part of the game. All a part of the game. Right, understanding the market conditions. And yeah, I mean, deleveraging, right, preservation of capital. So, you know, can't really lose here. We just gotta submit to whichever outcome it's gonna be, right? Also, quick note right there, did you see how we came and made relatively equal highs with that high but didn't get stopped out, right? You gotta account for spread. That's why I do one tick above this high. Whichever high you're looking at, do it one tick above and you won't get stopped out if for spread. If you see spread over here is one tick, right? So that's why I always do one tick above the high of wherever my stop loss is at, and then one tick below the low when I have my stop loss on taking long positions, right? That's so I give it permission to come and make relatively equal highs with it. But if we just go one tick above it, that's when I want to get stopped out, right? That's when I want to get stopped out. That would make it invalid. All right, so let's see if we can reclaim this fair value gap or if we start respecting it, right? Would want to see the counter bodies paint below this 2-minute fair value gap here. It's a little bit more, the 2 minutes a little bit more refined than this 1-minute fair value gap. But yeah, don't want to see the candles respecting it like that. Want to see it trade to and through, right? Reclaim this fair value gap and then respect it. So like, what do I mean by like that, right? I would want it to trade down below this fair value gap, right? As explained in this leg down here. And then it retraces back up into it. And then it respects it. The counter bodies are respecting it. The wicks are, you could just drag this over right here like this, right? Counter bodies are respecting it. Wicks possibly respecting it as well. The consequent encroachment, that midpoint of that fair value gap, right? Reclaim that 2-minute fair value gap here, right? Don't want to see the counter bodies respecting that. You see that right there, right? That is, we want to see that closure below. Get closed back inside this fair value gap. But we'll still wait patiently. You know, nothing to do on our end just yet. Yeah, just let price do its thing. But more in favor, right? We start painting below this fair value gap, getting that closure below, and then if we trace back up into it, respecting it, right? We're coming up on the 10:30 turn here in about 5 minutes or so. Let's check out the 2-minute, 3-minute. Right, when we got that, when we're talking about that daily SIBI trading to and through, look at how this candle just trades absolutely through all three of the fair value gaps. 1 minute, 2 minute, 3 minute, right? It just purged through it with to and through, to and through. right? Which is not something you particularly don't want to see when you're taking some short setups, but you know, price is doing the do. You just got to execute, right, without hesitation. I know the risk that I'm taking on with this position, you know, and that's why you just deleverage, and just, right, it's that capital preservation, right? We're trading, there you go, getting stopped out right there, right, which is completely fine, right? If we're wanting to get stopped out, then we're gonna do it on a deleverage kind of way, you know, which is completely fine, honestly. But huge shout out, honestly, to that Raul Powell for his video that he dropped yesterday on global macro, right? Global macro investing within the seasonality, right? Super fire video, just talking about the liquidity cycles, right? Even as we're taking this setup, right? That bullishness that we've had throughout the week, it doesn't even want to trade back into the weekly range, right? So if we flip back over to the mini contracts here, let's look at the 15-minute, right? And I brought this up right before we took that entry. If we're looking at the open on Monday, which is somewhere right in there, right? And we're looking at the high of the range, which is today. Usually, right? If we're creating that weekly candle, we want to come off of the high, right? So if we have the weekly candle here forming, this is a bullish candle. If we have this bullish candle here, right? All my candles are orange for bullish. We'll make it a little darker as well, right? If we're looking at a bullish candle, right? Bullish candles usually start being bearish. That's how we create that low end of the wick, right? On any candle, right? Any daily candle, weekly candle, right? It starts off bearish, right? Those are the best buying opportunities are going to be, right? This is usually going to happen earlier in the week. Monday, Tuesday, we'll get the Wednesday reversal, and then we'll start expanding to the upside, right? In bullish scenarios. But it's not likely that we're going to close near the top end, right? We're not going to close the week at the high, right? We got to get some distribution in, so we come a little bit off the high, right? But as you can see on this week so far, I mean, we could try again if it gets another shift in market structure after getting stopped out right there, but we basically are at the high. We're not even getting any retracement back down to, like, let's say the 20% here, which ICT talks about TGI Friday returning back into 20% of the weekly range, right? It's just roaring right now. Price is just roaring. Doesn't even want to get any retracement whatsoever in terms of the weekly range, right? We're just feeling, I mean, there's like no inefficiencies throughout like if we're looking at the past couple of days, let's get rid of this here. If we're looking at the past couple of days, how many 15-minute imbalances do you see here that we normally see, right? I mean, we have one here. I mean, like very far, a small little one right there that we trade back down. Oh, we don't even trade back down into that. None within this price lake here. Like, this is all efficient price action. This is all efficient price action from FOMC, right? The only inefficiencies that we have is to the downside here, which looks like it's just a retracement right before we get that expansion up higher still, you know? So it's like, that's why I'm deleveraging, right, on short positions, right? Because they're being presented, but there's no retracement whatsoever, right? If we're initially looking for a 15-minute retracement to go long here, and we just didn't get it, you know? So if it's presenting that short-term little sell model, right, possibly trading down into that 15-minute imbalance, filling in that 15-minute imbalance, you know, I was willing to take that, especially after such a bullish week. I mean, we're creating all-time highs multiple times throughout the week here, you know? So that's why, you know, protecting capital still. Sure, it's a loss, but that's just a part of the process. That's just a business expense. You know, just a business expense. Right? No single, when you manage risk, right? No single trade is like weighing, right? It's not going to completely blow your account if you're just managing risk, right? So like losses are just a part of the business, right? They're inevitable, one. And if you're managing risk, I mean, it doesn't really hurt you, to be honest, right? I mean, that's like a $186 loss on the funded accounts, right? 186. Let's see here. In percentage wise, 186 loss on each $50,000 account. You're looking at 0.37%, 37 basis points for that setup. I mean, come on. When we go normal risk at 0.5% to make 1%, and we're taking a 0.37% loss. I mean, it's just numbers. Look at the math, right? We're able to afford multiple losses within a single TP, right? So it's all about risk management, you know. We're taking a small little L. Nobody hurt. There's so much volatility going on this week, right? It is very minuscule taking a small little loss, right? When one TP makes back all the gains or all the losses, you know. Just a little numbers game, but I mean, we're crushing through all-time highs here. Like I was talking about earlier, right? If we're looking at the daily, when I first started trading ES, I don't look at the numbers too often, but we could just take a trip down memory lane real quick. ES was around 3,000, right? The S&P 500. We are over 6,000 within like 6 years. Pretty solid. Not as good as Bitcoin, right? Not as good as Bitcoin, but for an indices, you know, they usually say you double your money every 10 years, and we did it in 6. So plus the liquidity cycles that are coming, I mean, we're gonna have a relatively, right, not in a straight line, but relatively very good rest of the end of this year, right, based on liquidity cycles, and as well as like next year. I mean, we're coming up on that good seasonality, right? Good season, like the prime time for liquidity injection. Yeah, which Raul Paul talks about in that video about the liquidity cycles and just maturity dates coming due, right? So in order to pay the interest off of previous loans, 1 to 5 year loans, they need to issue more debt, right, to pay off the interest from the previous loans, right? They're kind of just rolling over their contracts, and this is usually, right, 2025 is when they start rolling over those contracts, so they need to inject more liquidity into the market, right? And if NASDAQ is the highest correlation to liquidity, then it's Bitcoin, then it's S&P 500, these assets are going to start booming, right? Sure, we're going to have retracements, healthy retracements, perfect buying opportunities, right? But overall, we're going to get some, in my opinion, right? In my opinion, we're going to get some very, very bullish price action, right? At the end of this year, till the end of this year, as well as next year, right? Because they're just going to inject liquidity, right? And when Bitcoin and other assets are highly correlated to global liquidity, M2 money supply, right? That means we should get some pretty bullish price action, right? This next 2 months to finish out the year, and then it going into next year. Combine that with the liquidity cycles of Bitcoin. I mean, we're in for quite the ride here. We're in for quite the ride. All right, we're creating some nice little short-term lows after getting stopped out here, right above our high. And we're also coming into the latter part of the first AM session. Plus, it's Friday, right? There's no reason to push super hard on a Friday, right? And we got a 3-day weekend, if I'm not mistaken. We got, I don't know if the banks are closed, but it is a US. Yeah. So on Monday, we got a little bank holiday drop in. I want to say it's Veterans Day. Yeah, Veterans Day. And then we have CPI going on next week, PPI, unemployment claims, Jerome Powell speaking, retail sales. So we got quite a bit of 8:30 a.m. news, right? With a 3 p.m. news on Thursday, right? With the bank holiday on Monday. So kind of just mapping out the week next week. Tuesday should be good after that bank holiday. We got a 10 a.m. orange folder going on there. So we should be lining up pretty nicely. I mean, going into the end of the year, I mean, we should have some good opportunities going into Thanksgiving. And then maybe after Thanksgiving, we start slowing down a little bit. But nonetheless, we'll be on the charts. Even if we get this shift in market structure, all right, let's check out the 2-minute here real quick. I mean, we did just get stopped out here. Let's check out where the 5-minute low is. I mean, there's not even any single lows inside of here until we get like down here. So I mean, even if we did shift on the lower time frame, we could just be filling in this inefficiency here. Keep working our way up higher. Right. Yeah. I'd rather just sit on the hands, honestly, and wrap up the week. What I'm kind of thinking now on the plan wise is going for about 3 full pulls. So, you know, having about, if I risk on average normal 50, what is it, 0.5% per setup is normal risk. Allowing myself about 1.5% in potential trade setups, right? Risk management. In order to, I want to hit about 2 TPs, which is about $1,000 per account per week, right? Which is basically just 2 setups, right? 2 TPs. That is kind of the goal. So allowing myself to go, you know, to try 1.5%, you know, whether that's a combination of 3 0.5% trades throughout the week, or if it's 3 half, you know, half risk trades, which would only be like 0.25%, stacking those to get, you know, towards that weekly goal. Yeah. I mean, solid, solid, right? Asset classes are booming, absolutely booming. With that being said, though, not trying to push super hard on Friday here. We took that one small little loss, which is this setup right here. Right, we took this small little L. Right, buy side liquidity. We got stopped out right there. Got in right about there. That was our one setup for the day. Very solid. And I will be back on Tuesday, right? We got a bank holiday going on Monday. So I'll be back on Tuesday morning. Appreciate everybody for tuning in, right? Hope everybody has a good long weekend. And I will catch you guys on Tuesday. Appreciate you. Take care.